Hello everyone, my name is Lamarr Baxter. I'm with Alternative Investment and Consulting. I'd like to thank everyone for joining today's webinar. Today's webinar will be in duration of approximately 1 hour, which will allocate approximately 45 to 50 minutes towards the actual presentation covering the content conveyed in your invite, which I'll go over shortly. Thereafter, we'll have a approximately 10-minute Q&A session towards the very end of the actual presentation. And for those who are unable to stay on the webinar for the duration of the time, we will be recording the webinar and be sending out a playback link towards the very end of the week. So once again, if you're unable to stay on the webinar for the duration, we will be sending out a playback link, and you can also share that with others who weren't unable to actually attend today's webinar. Just kind of give you a brief description of what's going to be covered today. As indicated in your invite, we're going to be talking about the cannabis industry, and in particular how it ties into various aspects of other industries, in particular real estate. One of the hot areas, as of within the last 12 to 24 months, a lot of my clients have actually been inquiring about purchasing real estate, whether it be commercial warehouse space as well as raw land and for cultivation purposes. But we're also going to be talking about other aspects of investing in the industry, whether it be investing directly or indirectly into the industry. We'll talk about some of the options that's available, some of the structures that's available, and then we'll talk about how to use a self-directed IRA, private capital, and we'll talk briefly about how to use a R.O.B.S plan for those who are looking to use retirement funds to be able to receive income today, to be able to benefit from this investment opportunity as well. To kind of give you an idea what we're going to be covering, we're going to be talking about the cannabis industry as a whole, both past, present, and the future in terms of where the industry is going on both the federal and state level. We'll talk about the current laws, both federal and state, pending laws, federal and state, the various areas to invest in the industry, for example, dispensaries, grow facilities, equipment, real estate, and other types of investment structures. Investment structures such as, we'll talk about the investment structures and different options, how to use a self-directed IRA and R.O.B.S plan, and business investment opportunities as well. So what we're going to do once again is the webinar is going to be approximately 1 hour long. Once again, it'll be 45, 50 minutes in terms of presentation time. Towards the end, we have the Q&A session. So what you want to do is use your chat feature to be able to send out any questions you may have, and towards the very end, we'll be able to answer as many of the questions as possible. If for whatever reason we are unable to answer all the questions, feel free to give us a call, and we'll take any calls or inquiries offline, whether it be via phone call or email. Just kind of give you an idea of my background and also the background in alternative investment and consulting. Let's go ahead and get my screen moving here. I've been in the finance industry a little over 30 years. I'm a licensed real estate agent as well as a licensed mortgage professional as well. And when it comes to, when I say mortgage, we also, through another organization, I originate mortgage loans as well as originate hard money loans as well. So one of the structures we'll be talking about in terms of using, different structures to be able to raise capital or to make an investment into the industry. Graduated from University of Phoenix and got a degree in business marketing, so I used that degree till its fullest to be able to reach out to people like yourselves, to be able to educate you on the different opportunities that's available to you. Over the last, say, 7 to 8 years, I've been involved directly with self-directed IRAs, being able to advise my clients on how to use the self-directed retirement plan to make alternative investments outside of, say, traditional investment opportunities such as Wall Street and such as stocks, bonds, annuities, and whatnot. And we'll talk about that also towards the end of the presentation. So what I'm going to do is read off our disclaimer, because today's objective is to be able to educate everyone on this call in terms of the various opportunities available in the industry, and really just kind of give you information and education to kind of give you an idea of which options are available to you and which direction to go. This is not a one-size-fits-all opportunity, so we're going to talk about the different opportunities and structures that's available. So if you have any questions, just go ahead and jot them down. As I mentioned, we'll try to answer as many questions towards the very end. Any questions that we can't answer during this presentation, feel free to give us a call. So once again, all information and materials are for educational purposes only. I suggest that everyone definitely contact either their tax professional as well as their legal professionals before making any type of investment. So before we get started, just kind of give you an idea about AIC LLC, which is Alternative Investment and Consulting. We specialize in consulting services, aid clients in making investment choices in alternative asset classes such as real estate, private placements, private stock, syndications, precious metals, real estate, and whatnot. Our niche area is providing consulting and other relative service to self-directed retirement plans for individuals such as small and medium-sized business, including R.O.B.S plan, which is an acronym for Rollover for Business Startup. We'll talk more in detail in terms of how that works, and it's a great tool if you're looking to use seed capital to start a business or to inject capital into an existing business without tax and/or penalty. So what we're going to do is we're going to talk briefly. We're going to have our first presenter, which is Mr. Franco Ferraro-Du. He's going to be talking pretty much about everything that encompasses in investing in the cannabis industry, and we'll talk about the laws and whatnot. So what will happen is after he does his presentation, I'll go ahead and take over and we'll talk about the different investment structures, options, and the tools available to you to make the investment, whether you're an investor or an investment promoter, to be able to raise capital in this industry. So at this point, I'm going to go ahead and turn this over to Franco. Franco will kind of give you a quick background on himself, and once we go ahead and take this away and get you guys the information that you need to get started. Franco, I'm going to pass this over to you whenever you're ready.
Okay, thank you, Lamarr, and thanks everyone for listening. Hopefully I can bring some good information and to this pretty complicated world of legal cannabis. I'll just give you guys a little bit about myself. I have an MBA in entrepreneurship from San Diego State. I'm an agent and property manager. I'm also a landlord of a dispensary in Santa Rosa, California. The backstory is it's a family property. My father passed away and I inherited it. It was really not that great of a location, couldn't find tenants, and then lo and behold, we had a lot of success when we opened our doors to a medical cannabis dispensary. They've done a lot of work to it. We get above market rents, and so obviously I've been trying to take that same model to other properties, both as a manager and an investor moving forward. I'm an angel investor both in tech companies and in cannabis companies. I'm also an author and a blogger. I'm contributing to CRE.tech. I have a Medium blog account. If you guys would like to look at me, it's Franco Ferraro. And yeah, I put my email up here because I'm more than happy to talk to anyone about any of this stuff. So please feel free to contact me. So let's go ahead to our next. We'll start out talking just about legalization in general. Obviously, there's been a lot of growth in the medical side of the legalization, California being the first in 1996, Ohio being another one recently added. We are preparing as we're transitioning from medical to adult use. Adult use is basically recreational. I've been advised by my lawyer that adult use is a more PC way of saying it, so that's how everyone in the industry has kind of been proceeding forward. Obviously, Colorado being the most notable one, Washington and Oregon are also quite far along. This next election coming up in 2016, we have a number of notable states that are looking to legalize adult use for cannabis, California being the biggest, but also Vermont, Arizona, Nevada. As far as I've seen, all the polling suggests that these will pass. So we'll see what happens in November, but everybody in the industry is kind of looking towards the future of legal adult use. Some of the big windfalls that have happened recently is the federal government has confirmed that it would not prosecute operators that were abiding by state laws. That was really big because for a long time, even companies that were operating legally under their state laws were still under scrutiny by the federal government because it's not a federally legal substance. Also, the states, they generally provide minimum requirements, but they leave a lot of leeway up to the counties. So that means that this is a very specific industry depending on where the operations are taking place. Therefore, it takes quite a bit of research to make sure that you're doing the right sort of investment in the right place. Let's talk about the limitations and risks. These limitations also are where a lot of the opportunities for investors are created. The major one is being that the legal cannabis industry has no access to traditional financing services like banking, loans, insurance. Basically, any company that has to deal with a federal regulation, be it the SEC, the FDIC, they're really not looking to get into the industry until there's further legislation telling them how to act. They don't want to lose any licenses. There's very complicated ownership structures in the cannabis industry. That has to do with how they were not structured as LLCs or corporations up until basically this year. Now they're all looking to switch. But before then, especially in California, they were organized as not-for-profits with board members. So that made investment quite difficult. Distribution is very difficult, obviously, because driving these products through different counties opens you up to different laws of the municipalities. Taxes are also a big limitation. Still a gray area. This is something that we think is going to get regulated within a year to figure out how to make these companies be able to pay federal taxes. But there are still a lot of kinks to be worked out. There's also no interstate commerce, just because every state had their own limitations and their own laws. They don't allow any interstate commerce. Also, because once you do interstate commerce, this becomes a federal transaction, and therefore it becomes under federal scrutiny. So obviously, we'll talk about the opportunities that are rising because of this industry. You know, the current legal market is estimated to be about $50 billion. I'd say that's probably a low estimate. Everything has always been low because of the clandestine nature of the usage of this. And eventually, we see this all being replaced by legal production and sales. We've now started to see traction with leading brands that are trying to come into the legal cannabis market. Microsoft is a notable one that just happened, I think, last week. Walgreens is also sending out a notice to their board members about possibly stocking some CBD products in their stores. So that's a great win for people looking to legitimize the industry. One of the other opportunities is that for a long time, the monopolistic forces that happen from economies of scale haven't been in place in the cannabis industry because any operator that got too big would therefore be under federal scrutiny. So we see this industry is kind of artificially fractured. A lot of smaller operators, people own one, maybe two dispensaries. There's no Walmart. There's no major distribution. So there's a lot of opportunity in consolidation there. Also, obviously, the market stands to grow after adult use becomes legal. People have predicted a lot. I won't go into what those are, but I think everybody is kind of under the assumption that there will be quite a bit of growth. Obviously, legal marijuana is one of the fastest growing industries in the U.S. If you're on this call, on this webinar, that means that you already kind of understand the growth potential here. One of the major changes, this is a recent Economist survey, that's a Pew Research survey that got some press in The Economist, is that for the first time ever, the United States has become a majority in favor of legalizing marijuana, be it medicinal or adult use. That's a huge thing looking forward towards legalization. It kind of seems inevitable when you look at it under this light, at least for this poll. Well, some of the reasons for that are millennials. They're the biggest demographic in the U.S., at least by growth and by purchasing power, growth of purchasing power. They will be eventually the major consumers, and they are largely in favor of legal cannabis. They are 68%, by far the biggest of any group. Thing to remember is a lot of these kids, well, they're adults now, they have grown up in a generation that all they know is legalized medical cannabis. So it seems a lot less new to them. That's all they really know. A lot of great headlines have come out. Lamarr and I have collected a lot of great articles that we would be happy to share, kind of touting what's going to happen in the future of the legalization. So we would be happy to share those with you. Here are just a couple snippets I've seen. You know, one of the major windfalls also was the biggest dispensary in California is called Harborside. It's in Oakland, and they were locked in a long battle with the federal prosecutors, and they've just recently had the charges dropped. So that's kind of set a lot of precedent for a lot of dispensaries and operators moving forward. This chart right here is nice because it kind of shows adult use cannabis growth potential and past growth to other what we would consider growth industries, be it, you know, telemedicine, big data, and obviously it is seen by a lot of industry insiders and investment insiders as one of the major growth industries moving forward. You know, obviously we've talked about only 4 or 5 states. So if we look forward towards possibly 50 states becoming legal, this is, for a lot of reasons, a huge growth industry. I'll talk a little bit about the types of companies for people who are a little bit outside the industry. You know, obviously people first think about retail locations, dispensaries. Those are the most noticeable. You might have one in your town or down your street and you've seen it or a billboard for it. And then people also think a lot about and you know, these are plants that need to get grown. There's indoor, outdoor cultivation. There's light dep, which is kind of a hybridized outdoor process. But that's really not only a fraction of the industry. We also have extraction, which is a way to pull the essential oils out of these plants. There's edible companies that are making cookies, pretty much anything you can imagine with cannabis infused oil added to it, and that should be noted that these will all need FDA certified kitchens moving forward, so that's going to be a big change in the industry. There's also been a big rise in branded products. You know, anything that you can sell as a brand to a store has a lot of upside potential, obviously, for your brand value. So we're seeing a lot of pre-rolled cigarettes, K-cups, that's Keurig cups, coffee, a lot of things with private brands on them. And obviously, as we look towards the future, there's a whole nother set of kind of ancillary activities, you know, with be it testing, transportation, security. These are all industries that are now looking to service the cannabis industry that aren't necessarily have to do with the actual production, but they do benefit from the growth of the industry as a whole. So I've structured this webinar into basically 4 different investment types, and these are in order of least involved to most involved. I just wanted to show people that there are a lot of ways. If you think that the cannabis industry is a good place to invest and you have an investment thesis, these are 4 different ways that you can act on your thesis. You know, the stocks, they generally are ancillary services and things like consulting, business tools. There's also hard money lending that is become a very important part of the industry due to these companies not being able to have basic lending services that other companies do. And real estate would be the 3rd one. As Lamarr said, that's been a very, very hot part of the industry, and that's kind of been my specialty. Just because these businesses need to be in a conforming zone to be eligible for a permit. So really the real estate is part and parcel with the industry as a whole. And then finally, the most involved would be direct investment, an angel investment in an early stage company. So you know, that would be another way for someone to deploy capital to try to invest in the marijuana industry moving forward. So we'll start with stocks. You know, when you talk about the marijuana industry, the companies are divided into 2 categories. There are the ones that touch the plant, and they're the ones that never touch the plant. If you touch the plant, you need a permit, and you are now subject to all those limitations that we talked about earlier as far as finding financing, finding banking. But if you don't touch the plant, you know, these are business services, security, transportation, logistics. They are able to have stock offerings. So as you can look up, I mean, there are companies right now that you could go purchase stock in. You can, CBDS, they're on stock exchanges, and you know, that's something that you could easily right now go and make a bet on the cannabis industry. Generally, the stocks that have done the best, that have been favored by investors, are companies that are transitioning from another industry into the cannabis space. Investors kind of have more faith in those companies moving forward because they do have a track record, whereas a cannabis company generally doesn't. So that's something to think about as you're looking to make your investment. There's also one of the downsides to investing like this is you really lack the upside of a consumer brand valuation. You know, when you're buying a stock, you're buying the valuation of a company almost more than you're buying the revenue stream. So a lot of these companies don't really have, because they don't have a consumer brand, they're just a business service. They don't have the goodwill that comes along with being something that has a branded offering. Another downside is that there's just a lot of hype. You know, I hear people all the time that want to buy a stock because it has canna something in it, and you know, that doesn't mean that it's gonna grow just because the industry is going to grow. You know, in 2014, 23 billion was lost in marijuana penny stocks. So there's still a lot of due diligence that's need to be done, even in the stocks. You don't just blindly purchase a stock because it has canna or MJ in the ticker symbol. So that leads us to the next kind of level of investing in the cannabis industry, and that has to do with lending. Generally, these companies don't have access to any sort of traditional business loans because their use would not be deemed as acceptable by the underwriter, being federally illegal still, or at least a federal gray area. So a lot of these companies are seeking hard money loans from either individual or groups of investors. These loans tend to be high yield and short term. 2 to 5 years is what I've seen. Obviously, every loan's different, and all of these loans are negotiated separately, but these are just the ones that I've seen come across my desk, tend to fall in a certain range. They also have to have they usually have between 8 and 12% yield. I think that's about the risk tolerance for most investors that are looking to give a hard money loan to a cannabis operation. Yeah, and they're often interest only, so they have a payback period where the whole principal is paid back. Many of these loans, they can either be for equipment or also for real estate. So when they are for real estate, they generally have about a 20 to 40% loan to value, and they usually have a lender's lien. So the note holders would be the first to recover if there was any sort of foreclosure on the property to kind of reduce any risk for the lender. So they also have, I've seen a lot of these deals also have been structured as convertible notes. And these convertible notes, basically upon the calling, once they become due, they turn into a note in the company. And this value is agreed upon beforehand. And it's a way for companies to provide an upside to investors, and also, you know, if things are going well, not have to be hit with a heavy cash outflow at the end of the notes period. So that's something I've seen a lot of investors be very interested in. These notes can also be fractionalized between friends, family, group. I'll let Lamarr talk a little bit more about this, but you know, it doesn't have to be just from one individual writing a check. So investment groups can take advantage of these lending options. These notes obviously have a limited liquidity, and that's because these notes have a reduced value up until the time that they are executed, just because there is a risk as an interest-only loan of a default. So obviously the play for these is to hold these notes until execution. I think that is some of the reason why we see such short terms, because people want to make their money and get their money back, understandably, and these companies are more than happy to do that because they're looking to expand and deploy this capital to make some more money for themselves. Another thing to note is that the maximum yields that you can charge for one of these differ from state to state, so it's really important that there is some you know, inspection upon these notes of making sure that they conform to each state's rules and regulations. So now we can transition and talk a little bit about real estate. As Lamarr said, this is a very important part of the industry, just due to the permitting process. You know, these are highly profitable businesses, and in order to operate without fear of you know, losing their permit or you know, getting raided, they are willing to pay a lot of times up to 4 times market rent in order to be in a location that can legally apply for a permit. And the interesting thing about this is the permits generally, it depends on which state, but they generally stay with the property. So while the owner has the right to use the permit, they can't take it to another property. So once you've gone through the permitting process, it basically instantly increases the value of this real estate. Some notable, obviously we have a use case for this because, you know, we've seen adult use legislation come through in a couple states, and in Denver, they've seen a huge spike in the commercial real estate industry through cannabis. One of the articles I read said that 1 in 11 of the industrial warehouses in Denver are currently being used for cannabis, and it's actually caused an uptick in the general price of commercial real estate in the Denver metropolitan area. The value of the real estate is estimated at about $10 billion, and that's expected to triple in the next 3.5 years. A lot of that just due to the increased demand because we have so many tenants funneled into such a small number of real estate locations. And about 30% of these real estate is considered institutional quality. That, I think, limits a lot of risk for investors in these because these are very rentable properties even if the cannabis industry were to disappear overnight. So there's a great fallback for a lot of investment on these. There are conditions for permitting and built into the returns. So that means that a lot of these deals initially offer a lower price point in order to bring in good operators and give them a chance to get a permit. They're generally structured as LLCs with managing partners. They also can be structured with a base payment plus a percentage of revenue. So that's a good way for property owners to participate in the growth of this industry instead of just having a locked-in long-term lease. Obviously, these long-term leases can also factor into the appraisal value. And I'll just give one more pitch for myself. If you or anyone you know owns properties that they think might be eligible to have a cannabis company, please go to my website or feel free to contact me. I'm happy to consult and help in any way possible. So here's an example real estate deal that I'm putting together right now. This is a building, it's quite large, but we like this building because it is very exemplary of what we would see, what we're looking for in a cannabis investment. Obviously, some of that has to do with just the price per square foot. We're looking for something in the $50 to $100 per square foot. The rent, we've seen it go anywhere as high as $350 per square foot, but we're just giving it a $2 a square foot for our quick estimate here on this example. That would basically, on year 2, once we are in full swing, give a profit of $1.2 million, which is about a 22% annual yield. That also doesn't take into consideration the increased value of the company or of the building. So, at a 10% capitalization rate of a $1.2 million profit, it values the company at about $10 million a year, or about $10 million. Also, these are generally structured as triple net leases, like most commercial real estate properties. So that means that the tenant pays for the taxes, insurance, and upkeep. So there's not a lot of expenses going forward. So then that brings me to basically the most involved piece of investing in the cannabis industry, and that's angel investing. I'll talk a little bit about just the basic principles of it. Companies generally have their valuation set, and investors are trying to bring that valuation down. Therefore, their money can buy a bigger piece of the pie. That is the biggest negotiations that happen between the company and the investor. Is this the valuation price? Most companies that are seeking capital are already operating. Be very wary of anyone that's trying to sell you on an idea. That's generally not how it works in the angel investing world. You want a bit of a track record of some positive cash flow. These businesses are increasingly looking for investors with skills or networks, not just money. There's a lot of dumb money flowing into the industry right now, and so a lot of times, if you do have a network, that's something that you can use to leverage yourself to be an investor in some of these companies. And VCs often take the lead role. That's because there's so much due diligence necessary for these kind of investments that generally investors would like to jump behind a bigger investor because they know that they have the resources to do the due diligence necessary. If you go into this, you have to understand the theory behind these VCs and this angel investment is that you expect most of your investments to fail. One of them, hopefully, that succeeds will make up for the losses of your other ones. These are very risky investments, but are very lucrative on what they can possibly gain. So that's just to be understood that these investments could completely lose all your money and have no liquidity at all in the meantime. So when we're talking about angel investing in the cannabis industry, obviously that is even more due diligence that's necessary for that, because a lot of these companies don't have a way to show you a track record. Some of them have been operating either under the radar or kind of in a gray area. Therefore, there's a lot of people that are selling something that they don't have. There's no way for you, or there is a way, but it's much harder to understand an actual track record of an operator or a company. Another thing is these deals are quite hard to find for industry outsiders. They're not on a public marketplace. A lot of these companies don't even want people to know that they're raising money. So it takes someone on the inside that gets a lot of these deals that come to their desk to, you find people like that, and then they can push you towards the deals. Another thing I will stress is that deal flow is a very big deal. In angel investing, you want to see a lot of deals before you make one. So that makes it even more important to find someone who gets a lot of deals on their desk, so you can kind of bring yourself up to speed with the general terms. Current operators and permit holders with a path to license, those are the companies that are getting the most investment right now. Be aware of anyone, like I said, that just has an idea and wants you to invest in their great idea for growing cannabis or anything cannabis related. Many companies have complicated financials due to that not-for-profit distinction that I talked about earlier, so it might take a little extra due diligence to really find out what a company is worth and who the major players are. Also, there's some legal and tax compliance that needs to be overseen. If you're going to invest in a company, you need to make sure that they are not acting out of accordance with the law, because your investment hangs on the fact that they don't. Also, it's important to note that there's a changing retail landscape. The industry that we know now will not be the industry that we know in 10 years as adult use becomes legal and all these kind of kinks get worked out. So it really look towards the future. These are long-term investments if you are doing an angel investment. So try to think towards what the industry will be and not what it is now. Some quick strategies. Obviously, crowdfunding is really gaining speed. No longer do you have to come in with $1 million, $2 million to be an angel investor in some of these companies. With crowdfunding platforms, they're happy to bring in with a much, much lower price point, 10, 25, 50K. Also, you can follow a syndication or buy into a fund. There's a couple of these out there. I have some colleagues that deal with these, so that's another way to kind of get behind someone who already knows the industry. There's a great network called the ArcView network I would advise people to check out. They are so far kind of the biggest nexus of investors and companies in the cannabis industry. So you can do some research with them. They're very, very well known and very well liked actually in the industry. Something to think about is, just to be aware of the illiquidity, the company strategy, and the overvaluation. Those are three things, you got to realize what's the company. Do they want to sell out? Do they want to IPO? Do they want to grow? And you need to know that before investing in these companies. And also you need to make sure that they are not overvaluing themselves and, saying that their little operation's worth, 20, 40, $100 million. I can't stress enough that this is something you really need to do your homework for and really find out as much as you can about the industry and the company before you jump into this. And I think that, it really helps to find an industry insider for help. If you know someone, obviously, I'm happy to answer any questions people have, look at any deals people have come by. But I would suggest if it's not me, it should be someone that that knows the industry and can tell you, can tell if someone's really telling the truth about their investment or not. So my quick conclusions for everything we've talked about. I know we've covered a lot, but I think everyone understands that the cannabis industry has a huge growth potential. The banking sector's inability to service the cannabis companies and the cannabis industry has created a lot of opportunities. A lot of the opportunities we've talked about are due to the fact that they're not looking towards banks to make these loans. They're looking towards individuals and groups. There's a lot of ancillary companies that are going public. You can look those up right now if that's a way that you think you should act on your thesis of the cannabis industry as an investment vessel. And then obviously the operators are using hard money loans for funding. That's a very big way for someone to lend a good growing company money and get a much better return than they would almost any other hard money loan or any other lending investment. The real estate is the key to permits, and they stand to gain much in value when these permits come through, and as the industry progresses, these are going to be million and possibly billion-dollar companies that are okay with paying a little bit market rate just because they want to be able to operate without fear of losing everything and not having a permit. And then finally the angel investment section of the industry is the highest risk but also has the highest upside. So that's something to think about. If you really want to jump in feet first into this industry, you can look to invest in an early stage company in one of their seed rounds of money raise. So that pretty much takes me to the end of my section on cannabis, and I think Lamarr has quite a bit to go over as well, so I'll go ahead and pass it off to him.
Great job, Franco. Lots of good information covered, and I'm sure I'm actually seeing questions coming in now. So once again, for those who joined the webinar late, we will be covering the questions towards the end during our Q&A session. As I mentioned, any questions that we can't answer within the allotted time, we'll be happy to take the questions offline, whether it be email or via phone. So we'll show our information towards the end of the presentation for you to reach out to us and get your questions answered. So as we move along, we're going to talk about the investment structure and investment options. And this is where we talk about how to use both private capital as well as self-directed IRA and different structures to be able to invest in this industry. So what we're going to do, for those who join briefly, as I mentioned, my name is Lamarr Baxter with Alternative Investments and Consulting. We basically serve as consultant as well as operate in the capacity of working with those who are making alternative investments. Being cannabis is an emerging industry, that's one of the areas that we've gotten a lot of interest, at least I've gotten a lot of inquiries on in terms of how to invest in that industry. So we decided to put on today's webinar. We're going to talk about just some of the different investment types and structures that's available using both private capital as well as retirement funds. As I mentioned earlier, for those who joined the webinar earlier, we are basically covering information in an educational capacity. The information we're covering today is for educational uses only, is not intended to encourage or to promote any particular investment. You always want to consult with your tax and or financial professional as it relates to getting advice and performing any due diligence on the investment before you make the investment. So what we're going to talk about real briefly is the self-directed IRA. Self-directed IRA has been around since 1974. It passed as part of the ERISA Act, which is the Employment Retirement Income Security Act, which basically allowed those who have retirement plans to invest in various types of asset classes, not just traditional what's offered on Wall Street. Basically, the type of plan is set up is usually held, should be overseen by either an administrator and or custodian. You have the ability to invest in both traditional and non-traditional investments, unlike maybe some of your regular types of retirement plans. Usually you're restricted to just traditional investments, stocks, bonds, annuities, and whatnot. It's a non-fiduciary plan, which means that you do not usually have a planner or advisor, so it's really important that you understand that you're taking on the responsibility of vetting the investment, choosing your investment, and providing all the performing all the due diligence before you make your choices. The plan types that's available with the self-directed plan is the equivalent which you have currently. You have the IRA, the 401k, the pension plans. What makes the plan a self-directed plan is the actual plan agreement, where it has certain language in the agreement allowing you to make different types of investment and to be able to make different types of investment using different investment structures. The plan can be either tax-free or tax-deferred. You definitely want to consult with your tax professional to determine which the best type of account for you, both short-term and long-term. We do have clients that actually have both tax-free and tax-deferred for variations of reasons as per the instruction or advice of their tax professional. Restricted asset classes for a self-directed IRA is life insurance and collectibles. So in essence, the question usually comes up, what are my restrictions with a self-directed IRA? As I just mentioned, life insurance and collectibles are your only restrictions. So as we talk about cannabis, or anything related to cannabis, that is not considered a prohibited or disqualifying asset class. However, you do want to check with your custodian. Not all custodians are allowing this investment structure. AIC LLC, which is Alternative Investment and Consulting, is set up through as an independent agent with IRA services, which we basically make sure that they are allowing for this type of investment to take place. So once again, definitely check with your custodian and or administrator to determine whether they will allow this type of investment into this industry, whether it be directly or indirectly. So the question always comes up, why a self-directed IRA? As we know, we took a hard hit in the economy back in 2007, 2008. So a lot of people are trying to recoup their losses and basically rebuild their retirement plans. One of the bullets here, as you indicate, as I'm showing here, is 10,000 baby boomers per day will turn 65 for the next 20 years. And of that segment of the population, approximately 75% of the baby boomer population do not have the resources to retire at their targeted age of 65 plus. So a lot of people are going to be working a lot longer, trying to recoup their losses in their retirement plan. And of course, it's self-directed because it offers a wider range of options in terms of investment classes and structures to be able to aid those investors to be able to rebuild their retirement portfolio. One of the other tasks they're going to face is be forced to work beyond the age of 65, and that's provided that their employer will allow them to work based on whatever variables may be in place, such as their age, and more likely maybe some physical limitations may restrict some from working beyond the age of 65. So once again, a lot of people are trying to get more proactive and trying to figure out different ways to grow their retirement plan. Skyrocketing healthcare costs and diminished Social Security benefits will also be a factor in terms of those who are looking to retire at age 65, not having enough money to basically live as well as to maintain those expenses going into retirement age. We also have to consider inflation and cost of living increases that will continue to erode the fixed incomes that we are counting on to be able to retire when we hit that age. It's estimated at $4.7 trillion, and once again, that's a moving number, is usually going up and down, and both IRA and 401ks are out there, and only 1% of that dollar amount is actually being invested in self-directed accounts or in alternative investment classes. So as more people start to look outside the box, is to look at alternative investment classes, cannabis, marijuana being one of the hottest classes right now based on the structure and the upside potential based on its infancy stage of growth, is where we've gotten a lot of inquiries, which prompted me to put on this webinar today. So the model in the self-directed IRA industry is invest in what you know and understand. These are some of the 4 top asset classes where since 1974, a lot of clients with self-directed plans have made their investments. So real estate being the #1 asset class, depending on the structure, whether it be single family or residence, land, commercial, warehouse spaces, you name it. Precious metals is basically beginning to gain traction once again, something that took off during 2008, 2010 when our economic situation was uncertain. Private notes and loans, whether secured and or unsecured, as Franco mentioned, one of the options that's available to invest in this industry is either through a real estate secured loan or even just a unsecured loan. I'd strongly suggest or advocate not to go that route, but once again, you do have that option. There's no restriction saying that you can't invest unsecured. If you have to go invest in an industry or one of these companies, at least consider investing in equipment through a UCC1, but you want some kind of collateral attached to that note in the event of default, that you have some type of recourse to recoup your investment dollars. Private companies is, once again, it ties into what we're talking about today. You're going to have a lot of companies popping up in terms of seeking investment capital to grow their investment, or should I say their operation, whether it be a direct investment in the cannabis industry or indirect. As he mentioned, there's a lot of industry security and whatnot where they're going to be looking to support and to provide services to that industry, and these are going to be industries or companies that's going to be looking for capital. So kind of give you an idea in terms of the wide range of investment options that many people have used the self-directed retirement plan, and I've kind of put in bold what we're going to be talking about today as it ties into investing in the cannabis industry: trust deeds and mortgage notes. Once again, as a private investor, meaning your IRA would become an investor, you're becoming the bank where you're going to be making short-term or long-term loans against a piece of property. So once again, you want to make sure that the proper structure is in place. I do provide consulting services for those who are not aware of how this is supposed to work. That's one of the reasons why I started this organization, is to be able to provide that service. Syndications and LLCs, that's going to also tie into the crowdfunding. Crowdfunding is something that's taken off since the passage of the Jobs Act in 2012, and just recently in 2014 and 2015, based on Title I and Title II, the SEC has basically laid out the rules in terms of the limitations in the structure of investing if you're an accredited investor versus non-accredited investor. So once again, the objective here, based on the passage of the Jobs Act, is for those who prior to the Jobs Act were unable to be able to solicit the public for investment funds. Through a proper structure and compliance with both federal and state law, that veil has been lifted to where you can go out there and raise capital for your investment opportunities. Real estate, once again, we talked about land, warehouses, you name it. So once again, there's a lot of our clients who are looking to make the investment directly in the industry by purchasing land and flipping it. When I say purchasing and flipping it, based on the anticipated passage of the legislation here in California to legalize marijuana on the recreational basis, a lot of clients are now looking to purchase properties and then turn it over and sell it at a higher amount after the anticipated passage of this legislation. Another option would be to purchase the property and hold it long-term and be able to lease it out to the cannabis industry. Some have already started to do that to where they're being a little creative in terms of they're serving as a partner by acquiring the property, and then the others are basically acquiring the property and leasing it out in the form of it's almost equivalent to a triple net lease to where the landlord receives a percentage of the profits from the operation. So there's a lot of different structures and ways that you can actually use real estate once again to be able to make this investment into this industry using both private funds as well as self-directed funds, and we'll talk about how to basically tie the two in terms of partnering. Cannabis and marijuana industry directly. Once again, that's basically making the investment directly into the industry. Once again, we're going to definitely check with your custodian or administrator to make sure that they will allow the investment within under their umbrella, because once again, not all of them are on board yet, but they're slowly coming to the table to make that allowable transaction for all their account holders. We talked about fractionalized notes. So once again, this is an area to where maybe not one, you may have, say, $500,000, opposed to one person coming up with the dollars to be able to make that investment. You're able to put together a fractionalized note amongst various individuals, a combination of, say, individuals as, say, even self-directed retirement plans. The percentage of ownership in the note is usually determined by what is contributed towards the acquisition, or if they're loaning the monies out, usually whatever amount is basically contributed towards that fund to loan the money out is basically going to be determining what percentage you own in that fractionalized note. Private placements and crowdfunding once again. So you have a lot of platforms out there. You definitely want to make sure that you check with because there's a lot of different investment opportunities and you don't want yours to get lost. I can see a lot of platforms coming online to basically service cannabis related investments. So if you can find any of those platforms that promote just that type of investment, that's probably your best bet, because once again, you don't want to be paying for a service to promote your opportunity where it's basically lost in the sauce, so to speak, in terms of being inundated by other investments out there to where you may not be on the first page, but you just want to be able to make sure that your investment is being promoted in a proper manner. And a lot of these platforms may or may not offer that opportunity to promote it. So that's once again where you got to do your due diligence to make sure that you're finding a reputable and a viable platform to be able to promote your investment opportunity if you're an investment promoter. I'm going to talk real quickly about prohibited transactions. This is really important when it comes to the self-directed IRAs in terms of the do's and the don'ts, what you can and cannot do using this type of plan. And it's really important based on what we're talking about, because once again, with the regulation in terms of both, say, the state laws, at least at this point, we want to make sure that you're compliant both as the investor as well as the investment promoter. But when it comes to the self-directed plan, there's rules we have to follow. So let's start. An IRA cannot engage in any transaction directly or indirectly with anyone or anything considered related to the IRA. So in essence, what they're saying is the actual IRA is usually an arm's length entity from the account holder. And some of the other disqualified parties, and what they would call the account holder, would also be certain relatives, which we'll cover on the next slide. Some examples of a prohibited transaction are selling, exchange, or leasing property, lending money, or extending credit, furnishing goods and services directly with a prohibited or disqualified person. So you want to make sure that you identify who you're doing business with, especially in a partnership situation. You want to make sure that you are complying with all the rules when it comes to Department of Labor and IRS rules to make sure that that person or persons investing with retirement plans doesn't disqualify their retirement plan. So once again, two key points with the IRA is there's no self-dealing and no personal use. So once again, this is supposed to be an arm's length transaction and basically geared towards the benefit for the time you retire. So disqualified person, so once again, the account holder and his spouse, any lineal descendants and their spouses, and any lineal descendants and their spouses. So anyone who's on the relationship line, whether it be horizontal or vertical, usually pretty much horizontal, you want to basically avoid working with or partnering with any of those disqualified parties. So when we say that, we say parent, grandparent, children, grandchildren are disqualified parties. Any fiduciary of the IRA, so if you're basically working with a real estate agent who is part of the transaction, or a CPA, or any other licensed professional who serves in a fiduciary capacity, you can work with them. However, they cannot be a partner in that transaction because of their fiduciary capacity. Anyone providing services to the IRA, such as a custodian, that employee or any principal in that organization cannot partner with you on any transaction. Corporations and partnerships, trusts, and estates, which is you own more than 50% ownership interest in those entities, are also prohibited. So if you're basically 49% have 49% ownership or less, then you're fine. You definitely want to sit down with someone like myself or with your tax professional to make sure that as you put together your structure of your agreement that you're complying with that rule if you're looking to use a corporation, existing corporation, where you have more than 50% ownership. So in essence, you definitely want to make sure you don't run afoul with the IRS, because they are checking. And I've actually had clients over the years who've actually been penalized, meaning their retirement plan disqualified because they didn't follow the rules. And there are certain mechanisms in place to where, because of the filing of the 5500 and other internal audits that takes place with the custodian, to where any violations will be discovered. In most cases, it's not worth it in terms of disqualifying your entire retirement plan. So we're going to talk real briefly about how to fund a retirement plan. These are your methods of getting funds into your account. Transfer is usually the method of moving funds out of an existing IRA over to the new self-directed IRA. The rollover is usually where if you have an existing retirement plan, such as a 401k retirement plan, any type of employer-sponsored plan, 457, 403b, and or an IRA, you can use the method of rolling over the funds. With the rollover, you have up to 60 days from the time that check is cut from the existing custodian to get those funds to the new custodian to avoid a penalty such as taxation and a 10% early distribution penalty. So it's important that you get those funds over within 60 days, not a day after, or you will be penalized and as well as taxed as well. Contribution is going to be relative to the type of plan that you choose or you're eligible for in terms of putting funds into the account out of pocket. We'll talk about that on the next slide. Conversion is for those who are looking to go from a tax deferred, such as an IRA or 401k, into, say, a Roth IRA, because they want to go from tax deferred to tax free. You definitely want to sit down with your tax professional to determine what the tax implications are for that particular year if you're going to do a rollover, because usually it could kick you into a higher tax bracket, because whatever that amount is rolled over is going to be taxed. And of course, if it kicks you to the next tax bracket, that's something you definitely want to avoid. So as I mentioned earlier in this presentation, the same types of plans that you may already currently have are usually offered through the self-directed plan custodian or administrator. So I'm sure as you looked at this list here, the traditional IRA, the Roth, the SEP, the Simple, the Solo 401k, these are all plans that can be self-directed and are offered through most custodians in terms of a self-directed plan. You definitely want to connect with your tax professional to figure out which plan is best for you, because once again, you don't want to violate certain rules in terms of contributing too much money into the plan, because there is a penalty for excessive contribution. So I see that a lot, to where someone start off with a plan that they didn't decide they were going to grow into at a later time, and they only found out that they have restrictions in terms of contributions. Usually if you're 1099 or self-employed, usually you're eligible for the higher contribution plans such as the SEP IRA and the Solo 401k or the Simple IRA. But in most cases, if you're W-2 or you're working for someone, you're pretty much limited to the traditional or Roth IRA, and these are your contribution limits for the various plans. So we're going to talk real quickly about the cannabis investment option. So one of the options that was discussed in Franco's presentation, we talk about the purchase of real estate, whether it be commercial land or warehouses. This is once again to where you can actually use the self-directed plan by itself, or with a group of other self-directed plans, or even a combination of self-directed plans and individuals, once again, it's important to basically lay out the structure and identify percentage of ownership based on contribution to the asset to make sure it's a compliant transaction. You're able to purchase real estate to sell or lease to cannabis business owners. So once again, that's something I covered to where, once again, we're talking about different investment structures and options available to those who want to invest in the industry indirectly, which in this case would be real estate. Investing directly in dispensaries or cultivation businesses is another option, which is more of a direct investment. Invest in cannabis industry equipment or technologies and suppliers. Once again, like, for example, you say a Microsoft or an Intel. These are big corporations, but you also have the suppliers and the other smaller organizations that provide them services and equipment to allow them to be able to be successful and profitable as well. So there's going to be a lot of sub-industries that's going to come up to support the cannabis industry to where it allows you to invest directly or indirectly into that industry. Transportation and security is going to be huge until we get everything ironed out at the federal level for the banking. There is a task right now in terms of getting product to, say, from the cultivation centers to the actual dispensaries, as well as getting cash from the dispensaries to the banks, is also a challenge. So once again, transportation and security is going to be an emerging industry as until the bank regulations are basically ironed out and allowing these institutions or organizations to be able to open up bank accounts and do banking through the traditional means. Loaning money secured by a deed of trust, as I mentioned, you can become the bank with your self-directed IRA, and once again, you can have the option of basically using the IRA or combining your IRA with personal funds. Once again, we're talking about the fractionalized note in order to become the bank, so to speak. Franklin mentioned the public and private stock offering, so definitely you want to do your due diligence, as with any investment where there's no tangible asset to where you have some type of security. You definitely want to do all your due diligence. At least with the investment in real estate or some type of equipment, you have some type of tangible asset or security to help preserve your principal in the event of default or loss. So once again, kind of weigh your options when it comes to doing your due diligence in terms of what's best for you. Once again, you have the opportunity to invest in all structures. Once again, just make sure you do your due diligence and consult with your professionals to help you do that due diligence. Fractional, we're going to talk about the R.O.B.S plan. This is something that's outside of the self-directed IRA, but it's something, a service or an investment vehicle that a lot of clients have. A client I'm working with in Washington right now, to where he actually used the R.O.B.S plan. R.O.B.S is an acronym for Rollover for Business Startup. Basically allows you to use retirement funds to invest in a C Corp structure in exchange for the funds from the 401k or retirement plan. The C Corp will issue private stock certificates to the IRA or 401k, so that's pretty much the investment structure. So in exchange for the capital from the retirement plan gets the private stock certificates. Now, unlike the self-directed retirement plan, you're able to use the R.O.B.S plan to receive immediate benefits, so you can actually pay yourself and actually run your operation. The most common question comes up: what is the deadline in terms of how long can I have those funds out there? You want to make sure, as with any investment, whether it be a self-directed or a R.O.B.S plan, is that you make sure that if you're close to 70.5 or at 70.5, that you have the ability to meet your required minimum distributions at 70.5, where you basically have to start paying taxes. Some clients usually set up a separate retirement plan to make sure they are able to accommodate that requirement in terms of being able to take care of that required minimum distribution without having to liquidate their investment, whether it be in a R.O.B.S plan or any other structure. But for more information on that, feel free to give me a call, because that is one of the options that's available, especially for those who are actually starting a business. This is an excellent way to use retirement funds as seed capital in conjunction with, say, some traditional or maybe even, depending on whether you're directly in the industry or non-traditional financing resources such as private money or hard money loans. Usually with most banks, if it's something that's indirectly related to the industry, you're able to, as long as you have at least 30%, which in most cases the R.O.B.S plan funds will accommodate that amount, you're able to get a traditional loan as long as you have at least 70%, or basically have 30% in the skin in the game on the actual loan. So once again, this is something that's available. And once again, using the R.O.B.S plan, we talk about crowdfunding. This is a method, once again, in conjunction with crowdfunding. So you can have a lot of different structures that's available to you to be able to raise capital if you're an investment promoter or you're looking to start a business in this industry. So investment structures, partnering with, being an LLC with a self-directed or private capital. So once again, you have the option to establish a multi-member LLC, or you can do a tenants in common structure. So if you're looking at real estate, the tenants in common structure is usually the least expensive way in order to partner without having to set up an LLC and to have to pay the cost to establish the LLC, as well as the $800 per year in the state of California to maintain it. The new deal exception is, I mentioned earlier, that you do have the ability to partner with your self-directed IRA, but the rule is that neither yourself or the retirement plan can have any existing or previous ownership in the investment opportunity. So you can't use, say, example, real estate. You can't have a piece of real estate that either yourself or the IRA owns and you want to later partner. It has to be a new transaction. That's where the definition new deals come from. It has to be a new deal where neither yourself personally or the IRA has any ownership interest in that asset, and you can actually partner. Now, the key is that after this partnership is established, that you have to split all income as well as expenses in accordance to the percentage of ownership based on that structure, and neither party could buy out each other, so it's important that both parties have a mutual exit strategy to comply with IRS and Department of Labor rules to make sure that a self-directed plan is not disqualified. We talked about loaning money, whether it be secured by deed of trust or UCC-1. Loaning money unsecured, it's an option, but not something I'd highly recommend. And we did talk about the fractionalized secured notes, once again using real estate or even, say, equipment as a form of collateral. Syndications and crowdfunding is something that's going to be a huge linchpin for this industry, and you will, I'm sure, see more platforms pop up to cater to the cannabis industry as it begins to grow. So as Franco mentioned, due diligence is very important. We emphasize this with the self-directed IRAs. In particular, we're going to talk about the due diligence in the cannabis industry. Ensure the business is compliant with both state and local ordinances and laws. Verify that securities structured offerings are registered with both the federal and the state regulators. Consult with your legal counsel and financial professional before making the investment. Definitely perform your due diligence, both the principals, the business, and all the partners, to make sure that everyone's, basically are compliant and doesn't have a shady background. Confirm your self-directed IRA investment is basically an allowable structure and that your custodian will allow. That's very important because I mentioned not all custodians and administrators are on board, so you definitely want to make sure before you move forward on the investment they will allow it. Let's see here. I think that's pretty much it. Ensure the transaction complies with IRS and Department of Labor rules. If you're not sure, what you want to do, go to the IRS website and look up Internal Revenue Code 4975, and it talks about what the do's and don'ts are relative to prohibited transactions and disqualified persons. If you want, I can also email that information to you. Just send me an email and I can get that over to you. I already have it in PDF that I usually forward to all of my new clients prior to them making investments. Ensure the investment provider is able to provide third-party asset valuation. It's not required, and this is something when it comes to crowdfunding, and this is kind of it forces the investment promoter to provide some form of transparency. Kind of like a real estate transaction, you have a third-party escrow company, where there's third-party escrow companies out there for the self-directed, or should I say the crowdfunding industry as well. And basically this is where the funds are held at all times, and they are usually a licensed organization, and they are usually complying to make sure that they are seeing both parties equally and they are neutral, but at the same time it makes sure that none of the dollars are actually held in the hands of the actual investment promoter, and it gives that layer of protection to make sure that everything is there and hopefully preserved, prevents the ability of some promoter just running off with your funds. Always use a licensed third-party escrow company. So once again, as you're shopping around for these third-party escrow companies, make sure that they're licensed before you move forward. If you have any questions, or if you like, there's two that I have in my database that I usually refer over to clients who are setting up these syndications, and before I even assist them in terms of providing my services, it's almost a must that they set up a third-party escrow company for their transactions. So in terms of establishing self-directed IRA, you want to make sure you establish your account. Fund it, meaning getting the funds transferred or rolled over from an existing retirement plan over to your self-directed plan. Complete your internal forms within your custodian or administrator to authorize the transfer of funds over to the actual investment. And also make sure you get over all the third-party investment documents. Pretty much straightforward, those 4 steps. and usually within 7 to 10 days, depending on the custodian or administrator, your investment is funded. So here's my contact information. If you have any questions, feel free to give me a call or send me an email. You can also visit my website. I have two, one for AIC Finance Group. Is for those geared towards those who are looking to set up the self-directed IRA, which is AIC SDRIA, and that gives you information on the self-directed IRA and also the ability to establish an account online. So we're going to go ahead and open up the session for Q&A. I'm seeing some questions here, and I'll kind of rotate between the information I covered as well as what Franco covered. The first one here is, and this is about can you speak to the cost components of the grow operation and the rent, insurance, taxes, legal utilities, logistics, raw materials? I'm going to let Franco answer that question.
Sure, yeah, I'd be happy to, Lamarr. So they're pretty cost-heavy operation, at least initially. They generally have commercial power rates, but a good-sized grow operation could easily have $10,000, $15,000 power bills every month. One of the tough things with their operations as well is they have no cash flow until the very minimum month 3. That's how long it takes to grow a plant from seed to basically being ready to sell. So they have that as a big cost component, is their power. Their rent is usually their other big one, and there's quite a bit of labor involved too. These are very, like I said, it's expense heavy in the beginning. They also have a lot of build out generally to do, buying equipment, buying a lot of labor in order to get this equipment put into place. But once they are into place, the profits are definitely there. The revenues outweigh the costs. So
okay.
they usually have to find an operator who's ready to make that initial investment.
Okay. Well, this here is almost either one of us going to go ahead and answer this question. I'll read the question, and I'll answer the question, and if you want to add to it, you can also do so, Franco. It says, how is due diligence performed on behalf of investors in property for grow operations? So basically, in terms of the grow operations, as Franco mentioned earlier, what you definitely want to do is make sure that they're compliant with all state and local laws in terms of ordinance. You definitely want to make sure that they have the license. In most cases, not to say that these, when they receive these licenses, that there's any form of due diligence performed, but I would like to believe, like with any license, occupational license you receive in the state of California, there's some form of background check that's performed. So some due diligence is performed, but your next level of due diligence is to kind of get more information on the individual, their expertise in that industry, and their background is what I would say in terms of doing the due diligence on that type of operation. Franklin, anything you want to add to that?
Yeah, I mean, that's absolutely true. Don't take anything for granted. Look, all these regulations are online. You can look them up yourself. One thing I will say is, especially for a grow operation, you want to do due diligence on the operator as far as their track record. As I just said, there's a lot of cost initially and not a lot of income, and that obviously gets exponential if these plants aren't grown correctly and things don't come out right. I mean, it's still agriculture. There's still a lot can go wrong. So you need to make sure that the person in charge is the right person to be in charge of such an expensive operation. Also, one thing I will say, and this is general in the cannabis industry investing, is have a cannabis-specific lawyer look over everything. Feel free to use your lawyers to do the initial pass, but I would definitely suggest finding a cannabis-specific lawyer, no matter what vertical you choose to invest in, to look everything over one more time, because there are a lot of specific loopholes and things to watch out for.
Okay, good response. Next question here is, since the grow operators will have to service the loan from profits from their operations, does the insurance cover the total loss from, say, fire, flood, or earthquake? Can lenders dictate the insurance coverage? I can answer. I'll let you go for now, and I'll elaborate on that question.
Okay, so this is a changing part of the industry. It's very hard for these companies to get insurance on, say, their crops, although the buildings can easily have insurance, just like any other tenant would have. But there is a new part of the industry that's growing quickly that is basically loss of income insurance, and that would insulate a lot of these operators if there was a fire or even just a bad harvest, that they could pay into this insurance and make sure to not have this whole operation, fall on its face because there's no cash flow for too long.
Okay, great. The next question was in regards to the R.O.B.S plan. Never heard of the R.O.B.S plan. This is something new. Is it something similar or something used in conjunction with the self-directed IRA? As I mentioned, it's totally separate from the self-directed IRA. It's another method of using retirement funds to serve as seed capital for either an existing or a startup business. The structure, as I mentioned earlier, is you set up a self-directed plan, or say just a regular plan, and part of the cost of the structure, setting up the structure, usually between $45,000 to $5,000, depending on who you have to set it up, but usually you want to make sure you have someone who knows what they're doing setting them up. We set them up. We charge $5,000, and basically that includes setting up both the C Corp as well as the custodian account, which is usually through Charles Schwab. And we take care of it's for $199 per year in terms of the annual reporting and record keeping. Usually that's the fee that you pay is for as a third-party administrator to file your 5500s, and if there's any type of loans needs to be taken out, or any adjustments in terms of distributions or anything of that nature, that's part of the cost that you pay $199 per year. So as I mentioned earlier, the structure is as follows. You set up the structure, and meaning you move your funds from an existing retirement plan over to, say, a Charles Schwab account. The account is then set up, your C Corp is set up, and once both entities are set up, you're basically going to be transferring funds out of your retirement plan over to the C Corp in exchange for private stock certificates. No different than if you receive an infusion from a private investor or an institutional bank. Those funds are to be used as you see fit to operate and to grow the business, and you're allowed to pay yourself. So once again, it's a great opportunity for those who are looking to start a business, but as we all know, it's almost impossible to get financing for a new or startup business, but this is an excellent way to go about it, in addition to be able to get the traditional financing, because in most cases what you will more likely pull from your retirement plan will serve as the 30% that most banks will require if you're a startup or new business. So that's pretty much that structure. If you have any questions, feel free to give me a call or email me. I'll display both my contact information as well as his in the next 2 minutes here. We're going to take about 2 more questions. The next question here is relative to, and I think this you could go ahead and answer this question. The question is, how does one basically lease the property as well as to receive a percentage of the profits? If they're, in other words, I guess they're asking if they're the landlord and they want to lease to a business, what is the structure to basically to receive the rents and then of course a percentage of the profits? Did you want to answer that one?
Yeah, absolutely. So this is a nice way to do it. You would offer a lower monthly rent in return for a percentage of the revenue is generally how I've seen it structured. You got to be very wary of having a percentage of the profit, because then the operator can rack up a bunch of expenses and not flow the profit through. So basically, it's usually what I've seen is 1 or 2% of the total revenue. That's something that's easily trackable, and it's not a huge hit to an operator, but it adds up to a lot. These companies can easily make, like a big grow operation can make $6 to $10 million a year in revenue. So that can really add up to quite a bit. So that's just something to think about. It's usually 1 to 2% of the revenue in return for a little bit lower of a per month price per square foot lease agreement.
Okay. And let's see, we've got time for one more question. This one here is in reference to the self-directed IRA. Which custodian does AIC LLC use for that's compliant to allow for the investment in the cannabis industry? As I mentioned, AIC has a contract with IRA Services, which is a trust company and actual licensed custodian located in San Carlos, California. So we're set up through them, and before we got set up with them, we want to make sure, because we knew we were going to be entertaining both investment promoters as well as investors in this industry, so they do allow for the direct or indirect investment into the cannabis industry. So if you have any questions, feel free to give me a call. As I mentioned, you can go to my website, AIC LLC, to get information on the self-directed IRA and in terms of what the fees are and whatnot to set up the account. I'm going to display your slide. Actually, before I pull this up, go ahead and convey your information as it relates to your contact information here. Actually, I got your slide here. Just got someone who's asked your contact information. So here's Franco's contact information for those who need to contact him regarding any investment opportunities that he may have available. So here we go here.
Or any that you might have available. I'm always looking
well, yes,
for
I do have
new and interesting things as well.
Right. Well, just kind of an FYI for those who are looking to invest, we are having an inundation of calls coming in for those who are looking for both land and commercial warehouse space. So what they're looking for, and these are actual investors, meaning those who actually want to buy and flip and those who actually want to buy and lease property. So if anyone's on this call who are looking for those types of properties, give me a call. And for those who are actually looking to take advantage of that investment structure, give me a call as well, because like I said, there's a lot of different ways that you can actually partner with some of these startups as well as some of those who are actually already in business in terms of maybe even acquiring the property for them and working out some type of partnership arrangement to where there'll be their contribution to the partnership in the business. So just give us a call. Frank, I know you don't have your phone number on here, so if you can actually give them your phone number.
Sure, yeah, it's area code 619-972-0603, and I'd be happy to take your call anytime.
Okay, well, I think that's it for today. I know everyone's busy. I didn't want to take up too much of everyone's time. If any questions that were not answered, feel free to give me a call or email me. Once again, here's Franco's contact information. One more time, Franco, if you could kind of convey your phone number, and we'll go ahead and wrap this up for today.
Sure, yeah, thanks everybody for listening. I hope it was informational. My number, feel free to call, is 619-972-0603.
Okay, I'd like to thank everyone for their time. As I mentioned earlier, within the next day or two, we'll go ahead and get a playback of this link out to everyone who registered. Feel free to go ahead and share that with any other parties who are not able to attend today's webinar. Hopefully, we'll be putting on some more of these educational webinars in the coming months as the industry evolves and there's more changes in the laws, both federal and state. Thank you, and have a great day, everyone.